But for the right person, that aisle can be a really good fit, because if they can't shop in the other aisles, the cost of aisle 3 can be 60% lower than aisle 2. And then, of course, aisle 4 is the association plan. But what I want to focus in on is aisle 2, because this is where the changes have been so dramatic and so many people are not aware of what has happened in the last, say, 60 days, 60 to 90 days. So this is where we as consumers can often get confused. We're going to go down aisle 2. We're going to look at the Medica and the Bright Health, and we're going to try and pick out a plan. So we pick out a plan that's right for that person, and then we take it to one of 2 registers to pay for it. We either take it to the insurance company register and pay full price, or we take it to the marketplace register, or some people call it healthcare.gov or Obamacare, whatever they want to call it. It doesn't matter. It's just a register. It's just a website that we take clients through the back door, or people can go through the front door to buy their policy. And then if they meet certain criteria, the government will help them pay for that policy. The biggest challenge that the realtors have had in that criteria, because most realtors don't have access to aisle 1, or many realtors don't have access to aisle 1, so that's not an issue. But the government says, if you have access to aisle 1, you can't go through the marketplace register. The issue that most realtors have is the income limitation. They would say, well, I'd love to go through the marketplace register, but we make too much money, because it's based on how many people are in the household and the amount of adjusted gross income that you have. That's really important as a realtor, because as a business owner myself, we know we can move that needle, right? Adjusted gross income is after our business expenses. So we can bring that adjusted gross income down. But it still has caused a problem, because in the past few years, because people, even as much as they try and bring their income down, if they're selling houses and they're doing really well, for themselves, they're oftentimes over the limit. And then the government says, sorry, you make too much money, we're not going to help you. Well, in the most recent COVID bill, most everybody's familiar with the stimulus checks that so many people are waiting to get or have gotten, right? What a lot of people do not realize is in that COVID bill, they dramatically changed the subsidies, or that threshold for income for 2021 and 2022. In fact, the change has been so significant, and I'm going to show you here how this works, but the change has been so significant that they removed the ceiling. So for example, a couple, for 2 people, the cap before was roughly $67,000 of adjusted gross income. But now they've removed that ceiling, and they have said that people will be paying no more than a certain percent of their adjusted gross income for the next 2 years, with no cap on it. And again, I'll show you, I'm going to share my screen here so you can see a little bit more of what I'm talking about. So this is a material that we distribute out, and the association can send this to you. You can contact my office and we can send this to you. I'm not going to go through this whole 8-page thing. There's just a couple things I want to point out in here. But this gives really the whole explanation of what is that register? What is that marketplace register? How does it work? And what has changed in that? And that's the health insurance subsidies. So as I go through this, there are 2 types of subsidies. One is a premium tax credit. That premium tax credit subsidy is where I, as an individual, when I go through that register, I can tell that, say, cashier, so to speak, being the marketplace, I can tell them, I want you to take my credit and reduce my premium. Or I can say, no, I don't want you to reduce my premium. I just want a credit on my tax return next year. Now that's pretty rare. 99% of people want to reduce their premium. The other thing that is available is a reduced cost sharing. Reduced cost sharing is when a person gets to a low enough income, they will also get a reduction of their deductibles and their out-of-pocket maximums as well. So I'm going to scroll down, and there's just one other thing on this document that I want to show you, and that is how the subsidies have changed. The key here, and if you're not a numbers person, don't worry about it. This is basically what this is saying is on the federal poverty level, for people who are in this income threshold, this is the max that they'll pay for their coverage based on their adjusted gross income. And it was up to 400% of federal poverty level. That was that cap. So like, for example, the couple, they were capped at roughly $67,000. Well, in the new COVID bill, they took the ceiling away. So now it's anybody who's at 400% and higher will pay no more than 8.5% of their adjusted gross income. And I'm going to show you, and I want to make sure I'm looking at the chat in case, oh, you're sending out, okay. We'll answer questions at the end, but I'm going to show you how this works, because I want you to see this in real time, because this is incredibly impactful. I'm going to give you an example, and this really isn't necessarily the exception. It's really more the norm. I've got a couple that they're both in their early 60s. They're just trying to bridge the gap until they get to 65 so they can be on Medicare. For the first 4 months of the year, they were buying a policy direct through the carrier because they couldn't go through the marketplace register, because for the two of them, their income was about 80,000. So they were over the 67,000. So they couldn't go through that register. They had to buy it direct. And for the first 4 months of the year, they were paying $1,800 a month for the two of them. And that's crazy. That's a really nice house payment, right? $900 a person. We went through the new rules, and based on the plan that they have through the marketplace, their cost went down to zero. They literally went from $1,800 a month to no cost. The gentleman that I was talking to, this client of mine, I could hear him, like his voice quiver on the phone. I mean, he almost started crying because it was so impactful to them and to their situation. And so I just want to show you a couple examples of this, and then I'm going to talk about what's the timing of it and how do you go about looking at this. So, and then I'll open it up to questions. And we can do all kinds of examples. It's really simple. So this website here that you see is, as a broker, it's my back door to the healthcare.gov. And the website is 5minuteinsurance.net. And the 5 could be the number or the word spelled out. And you can go in, it's not a website where you put your information in and then you're gonna get 1,000 phone calls. It's my website, but your information isn't sold or anything. You don't even put your name in anything. It's simple as can be. So I'm gonna show you an example. So we'll just use an Omaha zip code. So we'll just say 68137. And let's say we've got a couple in their late 50s. We'll just put them both at 58, just for sake of this. So in aisle 2, this is the full coverage plans. In aisle 2, there are 38 plans that they could choose from between Medica and Bright Health. If they have to go through the insurance company register, this would be the lowest cost plan that they could choose, $14.75. It would be a CHI only plan. They could only go to Allegiant. They couldn't go to Methodist or Med Center. Scrolling down with Medica, they call their Methodist Med Center network Elevate. So this would be the same plan if they wanted to go to Methodist and Med Center, okay? So keeping those numbers in mind, and knowing that the cap was 67,000, let's put in that 80,000. Now, the government says, well, assuming you meet the other criteria, you don't have access to aisle 1, the government says we're going to pay up to $16.18 per month for whatever policy you choose. So now start to look at that same list. Zeros, all the way down. The cost to them for their plan, you have to get down to the the 9th policy before they have any cost at all. And then $16, and we could go through all of these, but you know, it's pretty impactful. Let's say, for example, we've got, and I'll just do one more just so you can see it. Let's say we've got a 40-year-old, and let's say his wife is 42, and they've got an 8-year-old daughter and a 5-year-old son. And let's say they're doing, you know, well, let's say they're both working outside the home and they make 100,000. They're, as a family, they're still going to get $1,148 a month to apply to whatever health insurance plan they choose. So for that family of 4, again, 38 plans in that zip code, and this is for the whole family, $48 a month, 67, 69. I mean, this is reasonable. I mean, you're paying, you know, with this particular plan here, you're paying about $25, $27 a month per person. And granted, we can get into some of the plans that have lower deductibles. You know, we can talk about that. But I want to make sure this gets out there, because what's happening that I'm seeing, and the reason I was so excited to be able to participate in this Toolkit Tuesday, was when I go through this with clients, it's almost 9 out of 10 times people are like, I didn't know this. I didn't know it changed so dramatically. And so this is really impactful for a lot of people. So that's really, I understand it's 20 minutes and we've got an hour slotted, and we'll give you back some of your day if we don't get a lot of questions, but that's really what I wanted to go over. As far as the timing of this, the way that the marketplace works is aisle 2 is normally only open from November 1 to December 15th for a January 1 effective. But because of all this change, the government said, well, we're going to do what's called a SEP, a special enrollment period. We're going to open up the aisle, and it's open until August 15th. So you have until August 15th to shop in this aisle, and then assuming they don't hold it open and do another special enrollment period, then it will close until November 1, in which it will reopen for January 1 effective date. And again, through the 5minuteinsurance.net site, you can self-serve it, you can contact my office, you can work with your you know, if you have an individual agent that you work with already, you can ask them about it. You know, I'm here just to help as much as I possibly can and answer any questions that you might have. So at this point, I'll open it up to any questions, and we'll just see where it goes from there. And it's okay if you don't. I mean, you may not have been prepared to ask any questions on this, but. How does it, so Chris asked, how does it affect your year-end taxes? That's a good question. So let me clarify that. People often get confused about this because they think when we're talking about the income, they think that we need to know what your income was last year. That's not how the marketplace works. One of the few things that the government did well when they set this thing up, other than spending $50 million on this website, is that they said, okay, what we want to know is we want to know what your adjusted gross income is going to be in the year in which you want coverage. So what we do when we do the application is we do a projection. We can state whatever number we want to state. We can change it as it goes along. It's not set in stone. And then what they do is then in 22, when you file your taxes, they'll reconcile. They'll say, well, you said you were going to make this much, but you actually made this much. And then they'll debit credit on your tax return. So my suggestion to people is always aim high. Because if you can afford, like with this particular couple here, move that over. If you can afford let's say 120,000 of income, lowering this down a little bit, but if you said, well, that's still incredibly reasonable to us, and then you end up at 100,000 of income, you'll get a credit back on your tax return for what you should have received in the way of a subsidy. Hopefully that answered your question. And I'm okay with silence, so we'll just wait a minute or two and see if anybody else has any questions, Emily, and then if not, we can just make sure everybody has my contact information. Maybe they feel more comfortable just reaching out individually. We could certainly approach it that way as well.
Sounds good. Very quiet group today.
That's okay. Well, this will be a short Toolkit Tuesday then. You get to have an extra half hour back to your day. Again, the document that I went through, this document here, the association will be able to get that to you if you want it. I can get it to you. You can reach out to me directly. My email is sam@compassba.com. And happy to answer any questions that you might have. And again, you can tool around with the website yourself if you want to just initially see, what it might look like for you. And then again, happy to answer any questions you might have on that. So.
Sounds good.
All right.
Thanks so much for taking the time to speak today, Sam. We appreciate it, and for the information.
Yeah, I'm happy to have done it. I really appreciate you realtors. This is a tough industry, and I grew up in it. My father sold for many years, and I was a real estate minor and a Rho Epsilon real estate fraternity man. So I get it. It's a tough industry, but I have a ton of respect for you all. So happy to help in any way I can.
Awesome. Well, thank you again so much, and we'll email out the information and Sam's contact information for everyone who's here or who signed up to participate. And yeah, enjoy the rest of your day.
Okay.
All right.
Bye, everyone.
Bye. Thank you.